Welcome back to the channel. As always, if you're copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to look today at United Natural Foods Incorporated, ticker UNFI. This is a company that distributes food. Particularly, they're strong in their organic segment. So the type of clients are distributors, restaurants, and so on. And as you can see, the company has been struggling quite a bit over the last year or so. If we look a little bit further up, you can see that this is a company that has had quite a bit of ups and downs. But I think we are heading towards an up in the near term. And as you can see, this has already started popping out a little bit. So why is that? Well, the company is in the middle of a turnaround effort. They've been working to improve their profitability and optimize their operations as well as strengthen their financial position. What this means is that they struggled quite a bit during the pandemic, as obviously we can see over here. And they had essentially a distribution chain that didn't work too well. They were struggling with inflation, and that led them to leverage the balance sheet in order to put those things in order. So we have a look at that. Let's look at the balance sheet real quick, and you'll be able to see that the debt increased quite a bit, right? So, for example, we have debt here in the low few hundreds, right? Going all the way up to more than 3 billion. And as you can see, that number is still elevated. However, the company has started to deleverage and has confirmed, as the latest earnings report, that further deleveraging is going to be one of the priorities for 2025. They've been able to do this by generating more cash flow and also by increasing the efficiency of their operations. So, for example, they closed some legacy distribution centers that were not performing too well operationally. So the company reports in July, right? 2024 is now done. We look at this quarterly. You can see that 2024 Q4 is now done, and we are entering the first quarter of 2025, which is going to be reported on the 11th of December. In words of management, financial year 2025 is a year of delivering and deleveraging. But overall, 2024 was pretty good. It finished at the upper end of the ranges for net sales, adjusted EBITDA, and adjusted EPS, with quarterly adjusted EBITDA increasing sequentially all 4 quarters. Now, more importantly, and this is why I believe the stock had this positive upside move, is that the management introduced a 3-year roadmap strategy. And that strategy focuses on adding value to customers and suppliers, whilst at the same time increasing cash flow at the company. So they have already made significant steps to deleverage the balance sheet and dropped the net leverage ratio from 4.6 to 4 between Q3 and Q4 2024. And what we see as well is that the KPIs, operational KPIs, are performing better. So if we were to look at the transcripts, we see that, for example, the wholesale volume growth has increased 2% in the last quarter, with the natural/organic food growth increased 5%. The product inflation rate, which was running at mid-single digits in 2023, has steadily dropped from 6 all the way to 1.5 as of last quarter. So this is all positive stuff. And the shrink is nearing pre-COVID levels. Shrink is essentially food that basically goes to waste, and reducing that metric is positive for them because it improves their profitability. In other words, they have less waste of inventory. And again, one more time, the debt has been improved. So all these things are quite positive for the company. Now, the earnings for the next announcement are quite wide in terms of analyst expectations. And this is one of the reasons why I've chosen the stock, because I think there's going to be plenty of volatility in the quarter ahead. So the lower estimate is 9 cents, but that goes all the way up to 91. So as you can see, it's a very wide range with a mean in between of about 45 cents. So we're playing this with options, and there could be quite a bit of volatility down the line. So this is the way I am choosing to play this. I'm going to go long the 20th of December $20 calls at 2 cents, excuse me, $2. And I'm going to short the November 21 strike at 175. So in that scenario, we get, assuming a price target of $25, 170% return. If we reach that level after the 15th November expiration, that becomes 350%, leaving us with the opportunity to restructure into a vertical on the 20th of December earnings report. Then it becomes a free trade, and the profitability level is significantly better. Hope you enjoyed the video. See you soon.